The richest people in America pay, on average, just 8% in taxes. Meanwhile, you, earning a six-figure salary, are getting destroyed by the system. Why? Because wealth isn't about hard work. It's about mindset, leverage, and playing by different rules. Work hard, save money, buy a house. That's the loser's playbook. Wealth at its core is a mindset. If yours isn't serving you, the first step is to change it. Banks target you because they can sell you credit cards, loans, mortgages, chains that keep you in debt for life. Corporations exploit you because they're eager to sell you that shiny new device, Caribbean cruise, or sugar-coated coffee and donut. The government milks you because you'll pay the highest taxes, my friends. You're making everybody else rich at your expense. If you're in that situation, you need to make yourself rich before you make everyone else rich. Love yourself first. If you don't start now, you'll be stuck with it for the rest of your life, and it only gets harder as time goes by. Remember, difficult short-term decisions lead to easier life in the long term. Conversely, easy short-term decisions lead to difficult life in the long term. The money game isn't about being smart. It's about having the right wealth IQ. Wealth IQ can be defined as the integrated skill set that combines financial knowledge, disciplined behavior, opportunity recognition, and systems thinking to generate and sustain wealth over time. Network and relationships are very important. Invest in your network. Surround yourselves with like-minded people. For the network to work, you need to focus on what you put in, not what you take out. Let me give you an example. Back in the days during the dot-com crisis, there was an investment banker who hung around cafes in Silicon Valley, where all startup enthusiasts were hanging around as well, and nobody wanted to talk to them at the time. That banker now built one of the most successful investment firms out west. YouTube community has the same principle. You have to keep putting into the network to become successful. Remember 5 levels of leverage? We talked about this in other videos. To become more wealthy, you need more leverage. Personal leverage, labor leverage, media leverage, capital leverage, technology leverage. When it comes to money making, leverage is the name of the game. The end game of leverage stack is freedom of time, having assets, systems, and networks working for you so that your life is not tied to selling work hours. This is how 1% escape the time for money trap and live with autonomy. Debt and taxes make rich richer and poor poorer. Taxation is something people constantly complain about, but rarely do something about it. Consider this. Taxes are the biggest expense for wealth creation. Here's the game. Once you become a super owner, which usually means 500K in assets or more. So once you become a super owner, become a super tax avoider. And you can do all this legally. Poor don't pay taxes because they have no income. According to White House Council of Economic Advisors report, the top 400 wealthiest families in the United States pay average federal income tax rate of 8.2%. That is a range of 6 to 12%. It's the high earners with six-figure salaries working for an employer that get killed by taxes the most. If you are rich, you can legally optimize taxes by owning assets and borrowing against them, changing residence to lower tax jurisdictions, capital gains treatment, corporate structures, deductions, deferrals, trusts, etc. I could make a separate video about tax optimization, as this is a very detailed and rich topic. Let me know if you're interested. Every year, government adds more pages to the tax code. Why? They're adding it mostly for the rich. To conclude this video, let's go through a direct comparison of how various aspects of life are treated differently with poor or rich mindsets. Most people would say, I need to go to school. An entrepreneur would say, I need to build a valuable skill set. Most people would say, get a job. An entrepreneur would say, create assets. Most people would say, work for money. An entrepreneur would say, make money work for you. Work hard, work smart. Do you feel the difference? Most people would say, my house is an asset. A rich person would say, my house is a liability. And I think that refers to the house being the principal residence, not when you have multiple real estate assets. Most people would say, aim for work-life balance. An entrepreneur would enter the monk mode and focus and work hard until wealth is achieved. Most people would say, I need to earn more. An entrepreneur would say, I need to own more. Most people try to save money. Entrepreneur would like to invest money. Most people would like to invest passively. Entrepreneur would invest strategically. Most people try to get out of debt. Entrepreneurs would like to leverage debt. Most people pay taxes. They have no choice. Rich people minimize taxes legally. Most people say, if I fail, I quit. Entrepreneur says, failure is a feedback. Most people say, I can't afford this. A rich person would say, how can I afford this? Most people would avoid risk. An entrepreneur would learn from the mistakes and the risk. Most people would say, I'll do it later. Entrepreneur would say, time is my most precious asset. If you like the content, click like and subscribe buttons and check out my other videos right here. It's the foundation of everything we covered today.